Hello my dear friends, it's Yuri, and today I want to make new video about the results of the back testing in this video about the 10 biggest by the size influence in the SP 500 index, but without two of them, without stocks of Berkshire Hathaway class A and plus that Google class A. And this connection just 10 biggest ones, and I have made some advantages, some additions, improvement in my usual trading methodology. And this methodology, for example, here I have calculation for the AVAX USD for the crypto, but next video will be about cryptos. But anyway, we can see the what kind of results I'm analyzing in my backtesting. First of all, it's the total number of deals. They are here. The win rate, it's relationships between the total number of the profitable deals and total number of deals, plus that average mathematical expectations, which is the average result of each deal for all deals together, and plus that the total profit. It's a sum of profits from the different deals. So here it's not in percentage, it's just 35. It means that the profit was 3,595%. Plus that I have added one very important, in my opinion, for describing of the quality of the trading system results. It's the analysis for the profit factor. First of all, we are analyzing the number of, just a second, profitable sum. Yes, we are analyzing the total results of all profitable deals. So it's 4,831, and the same situation, the total result for deals which we closed with losses, fixed with losses, it's 1,236, and this way we are receiving the profit factor. In my opinion, the profit factor is the best measurement of the quality of trading system, because for example, this time it's 3.9, and profit factor 3.9 lets us to understand that our profits, the total number of our profits, is 2.9 times higher than total results of our losses. So in this connection, it's given us very good understanding of the quality of this process. Plus that, I think that it's quite interesting to analyze maximum profit relationships to the maximum drawdown. For example, maximum profit from one deal was 329%, and the maximum drawdown from one deal was 66%. In this case, relationships between the maximum profit and maximum drawdown is 4.99, very close to 5. So in this case, we can say that, okay, the maximum drawdowns, the deals with maximum drawdowns are not so highly influencing for our results. From another side, we can understand that, for example, just one deal with the most serious profit had very serious influence for our total results, because you know that it was approximately 8% from our total profit. So we can try to see where it was. It was somewhere here. Yeah, you know, that maximum jump during this period of time. It's quite a complicated strategy for the opening positions, it's simple. For the closing positions, but I don't want to, to sell you something in this connection. It's just the video for the educational tasks. In this case, I just talking to you about results. So if we are coming back and take a look for our actual results, I have taken not all the figures from researchers, but just a portion of them, most important. So we are analyzing the number of deals for the Apple, for example. And I need to say that the dates, certainly it's highly important from which date we have started. We are starting from the 6th of August 2017. So it's not 5 years, it's close to 5 years, but I prefer to take the backtesting starting from the, from the randomly choiced dates. It's close to 5 years, but not exactly 5 years. In this case, when I'm making testing for the different groups in the different times, I have a bit better picture about the results. So it's less depend from the actual date which we have found it for our researchers. So it's approximately for 5 years. Number of deals for the Apple was 392. Profitable deals are 62%, so it's less than two of sort. And mathematical expectations 2.0. Total gross is 880%, and the profit factor is 2.0, and the profit factor for the maximum profit relative to the maximum drawdown is 1.8. It seems that very comfortable, the zone of comfort is exactly profit factor 2, because you see that in the behavioral finance we have researchers which talking us that investors are prefer or maybe that feeling the same pleasure from $2 of income as the displeasure from the $1 of losses. In this case, the 2 is zone of comfort. And it's highly important in the long run, because it's not only the it's not only influencing for example but results, but it's certainly influencing for our everyday emotions, and it's given us better understanding of the what we are doing. We are just gambling on the market, or we are making the business on the market. So the same situation for Microsoft, and it's quite interesting because results are very close to each other. The only difference is, and you can see that very small difference between the mathematical expectations is given on the long run, it's given quite a serious difference in the incomes. But actually it's the same. In the case of the quality of process, it's the same figures. For Amazon, it's a little bit less complicated, because a little bit less preferable, because we see that profit factor is 1.8, and it's related with the fact that the probability of profitable deals is a little bit less, but the total the mathematical expectation is the same as for Microsoft. For Google, again 30%, but just 1.5 average profit. In this connection, the profit factor is 1.8, and the total gross 543%. Tesla, our leader. So we can distribute all those stocks from the first 10 for 3 groups. The first one is leader, certainly. It's a Tesla. And in other group is Apple, Microsoft, Amazon, Google, NVDA, and Procter & Gamble. It's quite interesting. And another group is the Facebook, UNH, G&G, and GPM. So Tesla, our record, 298 deals, 64 profitable, but average mathematical expectation, average profit is very high, 6.7. And this connection, Tesla is very close mostly to the cryptocurrencies, not maybe to the stocks And that is very interesting because, as you know, that Elon Musk is very close to the cryptocurrency industry. And in this case, the total gross is 1,984%. And profit factor is 2.6. In this case, we can see that the probability of the profitable deals, the mathematical expectation, the total gross, and the profit factor are very relative to each other. In this case, the Tesla is a leader in all of these positions, just not leader in the number of the deals, but it's more efficient. Why we are including those for unfavorable stocks in one group? Because you see that the profit factor of them is a little bit less than 1, so this position will generate losses if we will use this trading methodology at this long run. But other stocks in the Facebook, H and GPM well, very close to 1. In this case, it will be highly uncomfortable to trade them. Let's say that to receive profit in $10,000, we will need to make deals with the net profit, total profit, $110,000, and losses with $100,000. And it's very uncomfortable for trading, and I'm sure that you will not trade this system till the end. And plus that, we see that the probability of profitable deals is going less than 50% or very close to 50%. So in this case, the two factors, the mathematical expectations, and both of them, and the percentage of profitable deals are influencing on the final results. So the average figures are also quite interesting, because we see that here is the total number of the deals, here is the average number of profitable deals, percentage of profitable deals. Here is the average mathematical expectation, and this is the average result, and the total results is also interesting if we will make all of those deals, and our result will be 6,097%. And if we will invest in each deal, it's a money management mostly, invest in each deal just 2% of our, 2% of our capital, our gross on capital will be just 122%, but it's much more higher than not here. So the average rise of the growth of the SP 500 index during this period is close to 60%. So in this connection, it's twice more higher than average growth than the growth of S&P index. So the average profit factor is 1.6. In this case, it seems that it's necessary to exclude some positions from the